Joining us right now on the show, Rakesh Sharma, the MD at IDBI Bank on the show. Rakesh, hi, good morning. Good to have you on the show. We were just chatting earlier with the management of Sundaram Finance as well as to how management after management is saying that we're ready to challenge on growth. We're ready to put a full stop on that. We're not going to grow that aggressively, but it's the book quality which is extremely critical. To try and restrict and restrain the NPAs, that's going to be the key task. Is that the kind of thinking, Mr. Sharma, at IDBI as well?
Yeah, thank you very much. Good morning. In fact, we also have the same view. Number one, liquidity is not an issue. We have enough liquidity. The asset growth-wise also no issue, capital-wise also no issue. Only issue is that, demand should happen. So once the demand is there, so we are ready to take the growth. And now as far as this, quality of assets is concerned, there is a concern because the cash flows have been affected. But I will also say, the RBI and Government of India, they have come very proactively and they have announced various steps. So which will help us to contain the NPAs, like RBI announced 6 months moratorium. This will help us in containing the NPAs. So going forward, yes, there are uncertainties attached towards the quality of assets, but I think we are quite well prepared and to face the situation and to tackle it in a proper way.
Sure. The government backstop guarantee is one thing, Mr. Sharma, but to avail these government funds, if there is NPA, your balance sheet could get damaged once it is recognized. What do you feel about that, about, what you're already doing to try and clean up your books?
No, like you would have seen my results, which we had announced on Saturday. So already the books has already been quarantined. So, if you see the provision coverage ratio is 93.74%, and the net NPA has come down to 4.19%. So, the most of the issues we have already resolved. Now, coming to that guarantee scheme, the government funds and all these things situation will arise when there is a default. Now, the government has announced 3 lakh crore of SME facility. And now you will be aware, aware that this emergency credit line guarantee scheme, it provides that the facility will be extended up to 10% of 20% of the limit, and that to up to 5 crore. And these facilities will be extended to those borrowers who do not have default beyond 60 days, means SMA 0 and 1 accounts. That means those borrowers who are temporarily facing this problem, but otherwise their track record has been very good. So this facility is meant for giving them this temporary relief. So the probability of default, I don't think that it will be very high, because this the borrower's record has been reasonably good in the past. That is why they were able to maintain their payments very regularly. So the guarantee, the funds will be used only when there is a default. So this is a comfort basically being given to the banks. So I think once this default probability of default level, the NPA rising is less, so there will not be much addition to NPAs.
All right. Now you've got recoveries of around 11,000 crore this year. We were anticipating a recovery of approximately 5,000 crore this quarter, which didn't happen. Do you see that coming through in Q1? And what is the status of the larger accounts, the 2 larger accounts?
We were expecting a recovery of around 3,000 during the current quarter. As against that, we had around recovery of 2,000. As far as full year is concerned, we were expecting a recovery of 8 to 10,000 crore. And as against that, we total recovery return of upgradation and all these things has been to the range of 9,000 crore. So we are almost, in fact, rather we have overachieved the estimates. Yes, the position would have been better. The things were very good up to 29th February. But from 1st March onwards, when the lockdown started, so thereafter there were not much recoveries. So yes, could have been much better. and the results also could have been much better but for this. But yes, now this situation is there. We have to face it. The question is whether we are well prepared to face this situation. Yes. The banks are proactive, government is proactive, and RBI is proactive, and the proactive steps are being taken. So situation, yes, it is quite uncertain. Every day it is changing. But the thing is that if we are able to respond to the situation well, we will be able to control the position. Now, as far as the recoveries are concerned during the current quarter, since the lockdown continues, there has not been much recoveries. But once this now from today onwards, partial lockdown is there. Lockdown 1 has been declared. The opening has been declared. So after that, I think some recoveries will start coming, and the position will improve.
Good morning. Nikunj also joining in. The world is taking a haircut, but you got a new look. Is this the lockdown look?
This is that maybe new corona look. So for some time it may continue.
But that is really on a lighter vein, Mr. Sharma. I hope you'll appreciate that. My next question, Mr. Sharma, is that IDBI Bank is a corporate-facing bank. If a corporate-facing bank does not lend, what will happen to your growth? You may have a lot of liquidity and decide to conserve capital. But if you will not take risk, then what is the purpose in having a bank?
Now you see, first of all, let me clarify. This was IDBI Bank. What you say is right. That the bank was a corporate bank till about 3 years, 4 years back, when the corporate to retail ratio, retail was around 28% and corporate was 72%. Now, if you see my 31st March position, my corporate is 44 and retail is 56. Now that means we are totally balanced now. Over a period of 3 years, we have balanced our portfolio, totally realigned the portfolio. Earlier, our dependence was too much on bulk deposits. In liability side also, I have balanced it. Now my bulk deposits are less than 15%. So that way, the portfolio is quite balanced. But yes, we were earlier corporate bank and we have expertise. I will not say that we do not have expertise in corporate book. So we have expertise. And depending on the situation now, of course, presently, speaking about IDBI banks, because it was under PCA, we were not able to lend. But once PCA is lifted, so then we will take a selective view wherever demand is arising, and depending on the risk profile of various borrowers, we will be certainly doing the business. You see, bank is in the business of taking risk. If we do not lend and simply taking deposits, where will we place our funds? Will we place only in reverse repo or some intermoney market where we don't get enough return? We have to lend, but of course we have to take the calculated risk. So that is what we will start doing it, and this will only improve our profitability.
Okay, let's talk about your provisioning outlook as well, Mr. Sharma. The COVID provisioning, the aging provisionings, and then how all of this is going to impact your cash capital requirements as well. In light of this, would there be any fundraising plan that you have chalked out this year? Maybe a QIP, rights issue, anything on the cards?
Yes, certainly, madam. You see, our capital adequacy as on 31st March is 13.31. That is, if we just maintain the regulatory capital at 11.5%, then also we can easily achieve growth of 10%. So without raising any capital. But yes, in fact, we will like to further strengthen our capital and to ensure that the bank is not only adequately but quite sufficiently capitalized. We have planned, and in fact, in March itself, by way of Tier 2, we had raised 745 crores. So not only by Tier 1 or Tier 2, we will be raising capital either we can go to government or RBI, they can subscribe pro rata, or if need be, we can go for QIP also. Now I think our results are reasonably good. We have come out of this situation. The provision coverage ratio is almost 94%. So, like, the extra recovery which we take, it will be either adding to the profit or will be further reducing our provisions. Now, this provision, if you see, already in COVID, although the RBI prescribed 5%, we have made instead of 5, we made 10%. For June also we have made it. So the capital requirement is always there, and we have planned for raising capital, and we will certainly use all the opportunities to raise capital.
Okay, Mr. Sharma, good to chat with you today. Thank you so much, and glad that you could take time out and speak with us today.